So you're welcome to GoFX Hub. And I'll be making a top-down analysis, a simplified top-down analysis on US 30. On US 30, what does top-down analysis mean? Top-down analysis is the analysis done on a specific chart from higher time frame to a lower time frame, a higher time frame of interest to a lower time frame of interest. This is not a general concept. This is a specific concept regarding to what kind of trader are you. So I made mention of this in my previous video where I said there are different kinds of traders. You have the swing traders, we have the intraday traders, we have the scalpers. And the swing traders are the ones that take trades for take a trade in a moment and they close the trade for about some weeks and after a month perhaps. And why an intraday trader is one that takes a trade in a day and is expected to close the trade in that same day or after a few hours, about 12 hours, because the setup must have cooked and result must have shown either a stop loss, hit the stop loss, or hit the TP, that is the take profit. Also, likewise, you have the scalpers. The scalpers are traders that trade on a very, very low time frame, like 1 minute, even some of them execute at 30 seconds, a sniper entry at 30 seconds. And what do they, within 5 minutes, within at most 15 minutes, they are done with the market and they are going on with their profit or they take a loss. So now what do we have to talk about today? We are going to be making an analysis on US 30. As I've said in my last video, I am an intraday trader. An intraday trader means that I start my analysis from 4-hour time frame. And for 4-hour time frame, I bring it down or beat it down to 15 minutes where I take my entry. And sometimes perhaps if I need to refine, if I need to refine my entry, I refine it down to 5 minutes, so I can get a refined entry with a good risk to reward. For my strategy, the strategy I used, I do have a return of not less than 1:5 to 1:8 per trade most of the time, which I am 70% in profit in regards to that risk to reward. But if I'm going the month I experienced 1:3, I find that I was almost 90% return from 1:3, but from 1:5 to 1:8, it's about 65 to 78%. So now let's dive into what top-down analysis is. Top-down analysis, as I've said before, is the breakdown of your chart from a higher time frame to a lower time frame. An higher time frame from the 4-hour as an intraday trader, which I am going to be showing us today, from an higher time frame to a lower time frame. Higher time frame from 4-hour, as I said before. Sorry to just recite that again. As I said before, from 4-hour to what? 15 minutes, because I am an intraday trader. So basically, this is the pair we are looking at today. So now let's go on directly to what you need to know regarding top-down analysis. Top-down analysis, number one thing you need to know is market structure. What is market structure? Type in everything. So what is market structure? Market structure is the place whereby the market or the trader begins to analyze each chart and begin to see what is the structure of the market. You can find that some persons have asked me, why is my candles black and why is my screen white? Basically, it's because I found out that color of candles, making your candles have color, does not really have a positive, neither negative effect on the market analysis or top-down analysis. what do I want to do in the market? I want to analyze. I want to see the candle formation. I want to see the market structure. I want to see the price action. I want to see how the price is going. Is it a trending, a ranging market, a consolidation? So the color of candles is of no business to me. All I need to know is where is my entry point and my exit point. Then I'm off. So what I do is I put all my candles at black. At black. That means I have no bias to any candle. That means I have no favoritism to any candle. Either you are green or you're red, it has no meaning to me. So now, as it's black, a neutral ground, I play the candles on a neutral ground. On a neutral ground. So all candle has that meaning based on my strategy, not based on the color of the candle. I think we got that right. So now top-down analysis, when we are doing top-down analysis, I said market structure is the first thing you need to consider. Number one, you need to first know or study your market. Is it an uptrend or a downtrend market or a ranging market? For this, how will you know a market, your market structure is when you can identify whether a market is uptrend or downtrend or a ranging market. And how will you know a uptrend? An uptrend is a trend that has a consistent higher highs and higher lows, higher highs, higher highs. When it breaks a structure, when it breaks a structure above, it creates a higher high, then higher low, then higher low, higher high, and broke this again to create this higher high. Can we see that? Can we see that? To create this higher high, then this higher low, created this higher low. And I'm going to send a video very soon, maybe within next week, where he's going to be talking the reason why it's an higher low and the reason why it's an higher high. The reason why I counted this as an higher low is because it took this inducement, and that's why I can verify this side as the higher low. Then after the break of structure, I counted this as my higher high, as my higher high. A break of structure towards the upside. Answer that. Then this took the inducement here, and this one is now our higher low. This is our higher low. Then a break of structure over to the top side. A break of structure. This is what you need to put in consideration while doing your analysis. While doing your analysis, you must first get the market structure. Must first get the market structure. Then this breaking to the higher side, then this came all over to take away the inducement here, creating a higher low, a higher low. The trend has not changed. Most people make the mistake about the trend has changed. The trend has not changed. I'm going to explain that in one of our in my next video, how to know when the trend has changed and when the trend has not changed. And all the reason is because this program, sorry, this meeting is just for a top-down analysis, and that's why I don't want to make it cumbersome. So you can see it took this side away. When it took this inducement away, what happened? It came back to this side. Are you saying that a significant what? Significant swing point. This is a swing point, a swing low, and then it tapped in. After it tapped in, it what went up to what to buy. It went up to buy. So this is the significance of an uptrend. This is the significance of an uptrend. And what is an uptrend? As I said before, an uptrend is when it creates a consistent higher high and higher low. All right, good, good. You can see it broke the structure upward. So now, what is downtrend? Downtrend is when it creates a consistent lower high and lower lows, lower highs in the sense of it breaking structures downward, in the sense of the market breaking structure downward. You can see what is happening here. You can see what is happening here, right? So this is our higher low. Are you getting it? It's our higher high, creating this higher low. Then from there, it changed to an lower high. It changed to an lower high here. I never planned this meeting should be long, but let me draw it out so that you can see it. All right, good. This is a break of structure downward. This is a break of structure downward. It's a break of structure downward. This is easy. You can see this is a shift of market structure. If I should look into that, and then this is our lower low to create this lower high. Then this lower high broke structure to give us our lower low here. Then lower low, took this, it is an inducement. No, no, no. It's not an inducement. So the lower low, this lower low, we have to shift downward. A lower low is only confirmed when it takes what? When it takes an inducement. It's confirmed there when it takes an inducement. So that you won't start spotting things that are not right. So a higher high is confirmed when it takes a or breaks a structure. You need to get that. A higher high is confirmed when it breaks a structure. A lower high also is confirmed when it breaks a structure. Are we getting that? When it breaks a structure. So this did not take any inducement, so it's not a lower low, it's not a confirmed lower low. So move it downward to a place where it took the inducement. So this is the point that took an inducement. This point did not take any inducement. This place did not take any inducement. So this place took an inducement because it took away this price here. It took away the swing here. So this is our lower low. From this side to this side is a movement. Is a movement. So from there, we're going to take our lower high again. Our lower high. This is our lower high. Our lower high. So this is the proof of a downward trend. A downward trend. And then look at the follow proof. It broke the structure downward. It is downside. It broke the downward to the downside. So are we getting it? All right, good. All right, good. So immediately this market structure changed. I don't know the market structure has changed. Is because it took a significant high here, a significant lower high here, breaking the structure over to this side. So we know that the market has changed. So immediately it changed. Immediately it changed. It took this guy away. That's our formation of chalk. A formation of chalk. What's chalk? That's our change of character. Our change of character. Where is it? So immediately it took this chalk. You are going to see what are we looking next. Imagine you are in this period of market and you want to trade this market. Immediately chalk happened. What happened? We are expecting a retracement. So this has broke this structure. So we're expecting retracement. So I'm looking for the candle that broke this structure, the major structure. And I found out that is this because this guy swept the liquidity in this side. There's a liquidity here. If you look into it, it broke this guy downward. There's a sweep here. So when there's a sweep here, I'm going to take it like this and put my exhibition here. Then this sweep, I'm going to target as liquidity, where price is expected to come back to. Where price is expected to come back. Name it or rename it. This is liquidity downward. Where price is expected to come down, then the price tagged in and pushed up. The price tagged in and pushed upward. You can see a very nice trade, very nice exhibition. And with that, if you want to take your entry, you'll have to take your entry at this point. You take your entry at this point, placing it at the low side. Now, as I've said, my entry point is always about 1:5 to 1:8. 1:5, this is a confirmed winning trade. A confirmed winning trade. If I decide to which it is expected, I put my stuff here. I put my take profit at this high. because I know that the market will surely take this high. And when it's taking this high, look at the ratio, one ratio 7.8. So that's how we take our trade. So what is expected today again? You can see what the price of um Dow Jones, that's US 30, is doing again. So I'm expecting again for another further break in high for it to form another higher high to form at this side. So I'm not surprised when the price broke through the supposed resistance in this place, supposed resistance or supposed supply flow in this place. Because I know this market has took a higher high, sorry, a lower high, lower low, lower high, lower low, lower high, lower low. So that took this is a minor. It is selling so that it can buy. Market sell to buy, market buy to sell. Are you getting it? So what is it getting to? When this candle has broken through, has broke this structure upward, I then begin to look for where is my inducement, where is my engineering of liquidity. If I can cite those two, then I can know the reverse point of any market structure, a reverse point of any market structure. So let's look closely. This is the inducement. This is the inducement, and this is the engineer of liquidity. So immediately this is fulfilled, I already know um I already know that this is already what is about to reverse. The reason why I did not take a this thing here, what did I call it? A other block here is because from this side to this side, there's enough feel. There's a lot of feel of the candle. Can you see it? If you look at this candle very well, there's enough feel of the candle. So I know that all I need to take close attention to is my inducement here, and my engineer of liquidity. Good, it's back. So this place took a upside and came to mitigate, how would I say it? Came to meet this guy. I suppose that it want to continue the flow downward and get what our market behaves as if you want to create another lower low. So immediately there's a shift in structure here. You see that there's a shift in market structure at this point. There's a shift in market structure at this point. So we can go to the lower time frame to see what's happening there. Then let me go to 1 hour first. As I said previously, I use only black candles. Then this our engineer of liquidity, I'm expecting price to reverse. So when it came here, it went all through up. So this is our shift of market structure. Shift of market structure. Oh, do I have anything like that? All right, good. Right, this is our shift of market structure. Tell me that the price action is changing. So when it gets here, the price reversed upway to this side, upway to this side, then a rejection happened just to take away this liquidity. I told you when the inducement is taken away and when the investment is taken away and the liquidity is taken away, you can find your what? Your entry. When the investment is taken away, you can find your entry. So this is the NR of liquidity expected, and it is another conference here is the Asian low. The Asian low of that same day. Asian low of that same day, engineer of liquidity. So you can see what the market did. Market came out to this place, take the liquidity over here, and then boom, took the market up all over to this space. So where would I have taken my entry? I would have just gone all through to this place because I know there's a site of liquidity at this side. So I'll just place few pips below the liquidity side, and um take my entry at this point. I don't take fully, I'll just calculate about 20 to 30 pips. That's what they call it turtle soup. Are you getting it? That's what they call the turtle soup. So when it tapped in, I'm just going to take my entry straight up. straight upward. Straight upward, and I'm expecting it to break the real high at our 4 hours. The real high at our 4 hours. Are you seeing that? Because it's still a bullish market. Because it's still a bullish market. So you can see what happened here, the turnout as 1:21 and everything. So this is how you execute your trade and you do your top-down analysis. So your 15 minutes, you can take some minor trades within the day in your 15 minutes. In your 15 minutes, looking at this, just the open of the day after the ASIN session, you come here, you find your inducement, or where the liquidity or where the uh, break of structure happens. So when this come here, this become a sweep. When this all became a sweep, this guy at this point, this guy at this one broke the structure upward. And when he broke the structure upward, it took away this liquidity here, inducement here, and this one become the major candle. Then this one has been mitigated. So all this has been mitigated already. So since all this is mitigated, how will I take my entry? I'm going to take my entry at this point. I'm going to take my entry at this point. And when I take my entry at this point, since this is 15 minutes, I'm taking it to the current high. So these are the trades you can take within the day. I'm taking it to this current high or the supposed high level of the 4 hours to this point. That's 1:7. So I think the day should get to the point and we will be leaving right now. So um the way to take care. So this is a top-down analysis of a pair called US 30, the Dow Jones Industrial Average Index, and this is what I trade most often. And maybe some other days we're going to try some other pairs as gold. I had gold that was during this week, which was superb. I posted it on my TikTok page. On my TikTok page, you can see the entry. You can see the entry over here. You can see another entry. You can see another entry as a win to this place. This was a loss. This was the loss, but today again, this would have been a massive win for me. But I was not on chart today. I was not on chart today, so this would have been a massive good setup. So this would have been a massive good setup for me today. So do well to have a nice night and take care of yourself. Shalom.